on Morning Trade Live. Tesla shares are sliding this morning after the company missed third quarter earnings estimates despite reporting record quarterly revenue. Tesla's net income dropping 37% in the quarter due to an increase in R&D and tariff-related costs. It's the fourth straight quarter Tesla has missed the consensus EPS estimate. So let's just take a look at some other auto stocks across the sector this morning. We have got Rivian shares are higher, but the rest are down. Tesla leading the pack lower, down 3.5% almost. Ford is also lower. Going to be watching out for earnings on that one. And General Motors taking a bit of a breather after the gains we've seen in recent sessions off the back of its strong earnings report card. Tesla is the focus of the morning trade. Marley Kayden, as always, giving us a closer look at what the analyst community was looking for going into yesterday. Obviously, you and I were across these numbers, but what has been the reaction from the analyst community since then? Good morning to you, Marley.
Good morning, Sam. Yes, we covered this yesterday on Market on Close. We'll start bullish to bearish. How about that? Because a lot of response from the analyst community. Of course, it's Tesla and the first of the Mag 7 to report. So Cantor Fitzgerald actually raised their price target in response to the earnings yesterday, up to 510 from 355. So pretty significant increase there. Right now, Tesla trading at 425. So some pretty significant upside there, also maintaining their overweight rating. They say they remain bullish on Tesla over the medium to long term for their energy storage and deployment, full self-driving, robo-taxis and cyber cabs and Optimus bots. But they did make a note that with shares currently trading near all-time highs, it does suggest that new investors should wait for a potential pullback and try to find a better entry point. But very bearish. I'm very bullish, excuse me. Tesla also got their price target raised at Roth Capital up to 505 from 395. They have a buy as well. Now, they said that they felt that the delta for that 6 cents EPS miss versus the consensus came from their 6% higher tax and restructuring numbers. They did not seem to think that that was a long-term concern there. They did say their focus now turns to the Analyst Day. They think that that will materialize as a positive trade catalyst for the stock when those catalysts should be more clearly defined for 2026, because not a lot of guidance or outlook was given in terms of what to expect for the coming year. So they're really looking to that Analyst Day. Now we'll move a little bit into the middle range here. Piper Sandler says they remain firmly overweight on Tesla, and they think that the stock is underperforming, presumably because investors had expected what they call jaw-dropping financials. They felt that with deliveries and free cash flow at all-time records, that was a positive, but the backdrop didn't translate to as much upside as the firm had expected. They felt the headwinds of the tariffs and the mix and restructuring and that tax rate were the drag here, much like some of the other notes mentioned, but still overly bullish, primarily bullish here. At Truist, they raised their price target to 406 from 280, but that's still below where we're trading right now. They were upset that there was no guidance. They offered no guidance. They think their near-term data is decreasingly relevant. That guidance, very important. But they said most of the value in their shares is tied up in their AI projects, and they're quite unproven and, quote, potentially extremely unvaluable. So some pretty strong words there. Now moving to the negative, Canaccord lowering their price target to 482, but still very high. They have a buy rating. They said they're just debating whether or not the company can effectively bridge this near-term growth gap with the core EV business. So they have concerns about that. And then UBS, the most bearish here. They say that they missed because of the taxes. They didn't get any near-term outlook. And they keep a sell rating on shares with a $247 price target. So almost $200 below where we're currently trading. And they think that the market cap is already tied way too heavily to the AI ventures, which are, again, unproven. So mixed results here, but I think overall just general disappointment about the future. And as we talked about, Sam, that was what was in focus.
Oh, absolutely. And look, it wouldn't be an Elon Musk conference call either without some colourful and choice language there. I believe when he was referring to some of the recommendations by some of the advisory shareholder firms, it was corporate terrorists and asinine, which sort of means foolish and stupid. So, yes, all eyes on November 6th, no doubt about it, as a next catalyst. Thank you so much for that, Marley. I'll talk to you a little bit later. Let's trade it now with Joe Tigay, portfolio manager of the Rational Equity Armor Fund. How are you approaching your example trade for Tesla? Good morning to you.
Yeah, definitely very cautious. It was a quarter that kind of just said to me, we're going to be waiting a little bit longer. And as an investor, I'm just going to have to accept that this is a story that will play out over the next few years. I'm excited about the next few years, but we're nowhere near where we need to be yet. So looking like a 2027 story, not a 2026 story. And I'm okay with that. But for the short term, just have to expect some sideways action while the rest of the AI market might be going forward without Tesla in the short term.
Okay. Broader thoughts on the markets today, given the price action we're seeing out there, whether this is a little bit of a rebound?
Yeah, I see a sea of green. Unfortunately, Tesla is looking red in the middle of that heat map. But yeah, looking very good, specifically in the chips. Really great turnaround. You love to see it. Exciting to see it. There's just we should have expected this. October's been a volatile month. I expect it to continue to be a volatile month all the way through next week until the end of the month. And then usually you get a nice rebound in the fourth quarter. The market's really set up for this rebound. We're kind of waiting on some major events to get through it. The shutdown would be great to see that end. I think the market would breathe a sigh of relief. And also the recent trade flare-up between China and the U.S. If we can get past that, I think the market will be ready for that because the banks are saying the economy is strong. We're also getting interest rate cuts from the Fed, so all things are there for the market to rally. We're just waiting for that final push.
All right. Always appreciate it, Joe Tigay. Thank you so much for your perspective on the market, and also Tesla off the back of that key earnings report underwater in trade today. Joe Tigay, Portfolio Manager of Rational Equity Armor Fund, joining me there.